All right, it is time for the real halftime report. Nicole Petallides at the Exchange. Michael Robinson joins us from San Francisco, and Cheryl Casone right here in New York City. We've got GoPro going public. They hope to raise $100 million when their IPO hits the market. All right, Michael, are you going to buy it?
If I can. Yes, I love this company. You know, it's a great success story. It's the kind of thing you talk about here regularly, Stuart. The guy's a surfer in 2004, and in 2014, he's going to take this company public. You know, they've sold 8.5 million of these cameras already. Their YouTube channel gets 20 million visitors. They have just under $1 billion in sales last year, and they're turning a profit. So I think they can have a very successful IPO.
Okay, real fast. Are you not bothered that it's a single product company? All they've got is a GoPro camera.
I'm not concerned at this point. You know, a lot of biotech companies go public, and they haven't even gotten finished through with their clinical trial. So right now it is a one-trick pony, but I do think they'll be adding more material later on.
All right, Michael. Here's what else we're watching for you today. Start with Verizon. Their chief says any talks of a deal to buy Dish Network, fantasy. All right, Nicole, deal with that one.
Right? Sometimes a fantasy is all you need, and that's what we saw there with Dish. It got a pop because of the news and now pulling back. Right now, down 2.7% as the Verizon CEO says, no way, we are not in talks with Dish. There were not, and there are not discussions going on with Dish. I think because of all the talk with AT&T announcing its plans to move on with DirecTV, everybody began to speculate. So the Verizon CEO, McAdams, comes out and says exactly that, and saying that owning a satellite company is something that he doesn't feel is intriguing at this time.
And so down goes Dish. There you have it. Now, if the NFL walks away from DirecTV, if they did, then AT&T could walk away from the deal to buy DirecTV. Michael Robinson, what do you say about all this?
Well, it certainly puts the NFL in a very advantageous position as you're going in to negotiate this contract. As you just mentioned, they've been around since 1994, this tie-up for a Sunday Ticket. I wouldn't want to have the NFL having that much say in the matter. But I don't think at this point, I don't see any reason why it will derail the deal. I think the NFL wants to continue doing business with them, so I think they'll work it out.
Yeah, because, look, we've been saying on this program that the whole driving force behind AT&T's going for DirecTV is live sporting events that you can watch anywhere, anytime. We think that's the driver. You agree with us there, Michael?
That is definitely a very big driver, Stuart. You know, it's a go-anywhere market out there. Mobile TV is huge. My kids watch TV. They don't watch it on any traditional device anymore. It's on a smartphone or a laptop, so I agree with you, definitely.
Yeah, you're right. I mean, these kids, I tell you. All right, look at this number. It's from Zillow. Close to a fifth of U.S. homeowners underwater on their mortgage. Cheryl, housing, we're going to say it's flatlining, isn't it?
This is one of the biggest problems for the real estate market right now, and we are now seeing the proof in these numbers. We just got these from Zillow out today, and it shows us that basically about 10 million homeowners are underwater, which means that their mortgage payment is more than what the home is worth. That's 18.8% of homeowners. Top cities, not going to surprise you. Las Vegas is a big problem. Also Atlanta, also Orlando, Florida. And then also there's the negative equity story that's happening, Stuart, out there. This is a big issue. Negative equity means you could sell your home, but you would lose money in the profit. You have to pay the broker. You got to pay the commissions, the taxes. People are stuck, and it's a lot more than any of us thought. Does give you a reason why a lot of this data has been negative, Stuart, over the last few months that we've seen in housing.
Yeah, and that's 6 years after the crash, Cheryl. That's really something.
Yeah.
Then we have Home Depot. It disappoints, but I believe the stock is up. Michael, are we wrong to say Home Depot is a kind of an economic indicator?
Well, it's an economic indicator. I wouldn't say it's the most important one. It does give you just like a flash report on what's happening with housing. You know, profits per share were up very strong for the quarter. I think the company is doing well. It barely missed what the street wanted. It did raise guidance slightly. I think it's healthy. 3.3% annual increase in same-store sales. They're selling material in what has been a tough, very tough winter for home repair, home construction. Anybody wants to renovate their own home, they couldn't do a lot of work during this period. I think it's a pretty good report overall.
Fair enough. Well, that's it for the real halftime report. Everyone, thank you very much indeed for being with us today.